Hello and welcome to the Capital Call with the Millegan Brothers. I'm Quinn Millegan.
And I'm Drew Millegan.
And as you might see, we have a wider range of view for you folks that are watching video on Spotify or YouTube.
Yeah, we've turned up the FOV settings.
Well, let's get into it. I mean, it's an eventful week as it always is, right? And stick here till the end. We've got a segment, This Day in Economic History. Haven't told Drew about what it is, so you'll get his honest reaction.
My honest reaction when, yes, it'll be great.
Well, just to start out, the markets are down for the week. It's about 2.5% decline across the board, and a large part had to do with some tariff items that, as it always is, right?
Yeah.
Now, one thing I did want to start out with, though, Josh Brown on CNBC made a really interesting comment for investments that narratives change, right? You got to always look at your investment thesis as far as individual companies, because what was true yesterday isn't always true today, right? Margins change, the world changes.
It was interesting. It seemed like the market didn't quite believe what was happening with commerce this week. I hate to keep talking about the same thing over and over again, but really that's what's driving the markets right now. It's just all this talk about commerce, trade, and tariffs. I mean, most recently today, a big reason why the markets were all down this week was because at the last minute, the Trump administration didn't fully enact any tariffs, but it announced that it was going to enact 50% tariffs on the EU and then a 25% tariff on all iPhones, which it did later clarify was just on any smartphone not made in the U.S., which is pretty much all of them.
They just say iPhones because they think that's the all-encompassing term for smartphones.
It's pretty typical that your leadership of any given country is going to be stuck 20 years behind the times. It's just a factor of age.
And they were talking about estimates about what it would cost to produce iPhones in the U.S. And mind you, it's a little bit preposterous because I don't even think we have the labor to do it for iPhone production, Samsung production, whatever.
Well,
but, an iPhone.
I mean, geez, you just look at the open industrial manufacturing jobs alone.
Oh, yeah.
And, people don't want to work these jobs. Unfortunately.
And even if you could, we're talking $3,500 for an iPhone. I mean, that's an insane price increase.
It is. I wouldn't pay that. Maybe if I got on a payment plan, it was my only option.
Yeah, I mean, most people buy it on a payment plan anyways these days, so you could argue like the consumer is not that price sensitive, but you're still talking, a threefold increase on their payments that they would have to do.
You are. Smartphones would become a luxury item again. What you're talking about also is multiple years of planning and construction to get those factories back into the U.S.
And speaking of U.S. manufacturing, one thing that's been on everybody's mind is Nippon Steel and U.S. Steel. It's the Trump administration announced that they are going to allow not the merger, but Nippon Steel is going to be a shareholder in U.S. Steel, and U.S. Steel retains the name. It seems like a marketing gimmick, quite frankly, but I feel like the merger, whatever shareholder investment, should be allowed. I mean, the U.S. Steel is such a small portion of U.S. manufacturing.
Biden protected U.S. Steel from that acquisition, and he got no benefit out of that. I would say the unions all voted against him anyways.
I don't know why the administration even barred it.
I would say that the hesitancy around U.S. Steel has more to do with historical brand image and culture than it does with anything to do with economics. I mean, there is an argument to be made that steel is a basic material that the U.S. should be producing at least some of locally for the purposes of national defense. Like, there's a real national security reason to not warrant the merger of U.S. Steel with a foreign power. But, in just purely economic terms, there was no point to it. There was no reason. U.S. Steel is inefficient. It's old. It doesn't employ a lot of people. It's just been totally eclipsed by all of its international competitors. There's a good argument that it probably should have just been allowed to merge, and then Nippon Steel would have invested in the U.S. production anyways, which is what they're doing here, really.
Yeah.
Really what this is it's a way to sell the merger in a way that doesn't get rid of the independence of U.S. Steel.
I feel like that's somewhat of a benefit I'm not against it. I feel like at least it's happening.
This was a good compromise. I just, it's very much a political compromise and not a real there was no business reason to structure it like this.
Yeah.
But at the end result will be the same. Nippon Steel is going to invest in modernizing the facilities, really just improving U.S. Steel's overall efficiency.
Right.
Which is a good thing.
Oh, yeah.
So U.S. Steel will remain U.S. Steel. There's, we have here in McMinnville in Oregon, we have the last real manufacturing facility left is the steel manufacturing, Cascade Steel.
I wouldn't say that. McMinnville has its fair share of manufacturing, more so than you would expect for the size.
I would say old line manufacturing.
Old line. We have some innovative ones too. Most of them are like subcontractors, so they sell to the big guys, machine shops, tubing, stuff like that.
I mean, but that's like new manufacturing. I just mean like the old, the steel workers type of stuff.
Yeah, we have what's called Schnitzer Steel here, which mostly, or Cascade Steel, I guess it's called. It mostly deals with, the plant here mostly deals with recycled steel. There was a big problem a while back, actually, with Schnitzer. You might remember when China stopped buying recyclables in bulk, the price of recycled steel cratered. So it caused a really big issue. Like there was no demand basically for the steel. It's the plant has survived to its credit, but it's a real big point of pride here for McMinnville. It was attracted here back in the 70s by a very motivated group of people on McMinnville Economic Development Partnership. So if it were to ever leave, it would be a big blow.
By the way, something that came up, I have, because I'm a big fan of Garfield, shout out Jim Davis, right? I have a Garfield calendar that I tear off every day. And it's got a thing on the back. Funny enough, over the weekend, on May 17th, it says 233 years ago on this date, May 17th, 1792, 24 brokers and merchants signed the Buttonwood Agreement, forming what would become the New York Stock Exchange. So I thought that was an interesting tidbit that I wanted to share with y'all.
Yeah, there used to be exchanges everywhere, man. It's always a shame that I don't see more of them, but they're all virtual, so it's not as though we don't have new exchanges.
And well, I mean, we're getting the Texas Exchange. That'll be interesting. I'm surprised that in this day and age, someone would venture to bring a new one online. I wonder if it will be similar to the Toronto Venture Exchange, where it's kind of niche.
I think it will be.
But they have aspirations to be, New York Stock Exchange, but in Texas.
My understanding of that exchange is it is going to also be virtual to a large extent.
Like NASDAQ?
Like NASDAQ. It'll be like the NASDAQ. I mean, if you want to be competitive these days, you kind of have to be like the NASDAQ. The NYSE likes to tout that, like the New York Stock Exchange likes to tout that there's still some manual controls in there. But, like with anything in this industry, it's all robots conferring with other robots.
Right. In other news, it's a 3-day weekend at least for traders, which is rare. Sometimes we have weird holidays, though, and
whoop whoop, as the traders on the floor say.
Yeah, they yell that at the the bottom half of the last hour on 3-day weekends.
Yeah, they seem to do it earlier and earlier every time they do the whoops before the long weekends.
I saw a great headline saying that with all this, this talk of 50% EU tariffs and 25% smartphone tariff, that the trade war escalations ruined all the traders' weekends, 3-day weekends.
Yeah, they thought they were going to get through the week without something crazy happening, and then something crazy happened. We've talked tariffs to death, and I think, quite frankly, I think people are sick of thinking about it. Yeah, I'm sick of thinking about it.
I think the market largely has baked in the idea that we have no certainty around policy and the trade war, and so you're starting to see a shift in what's appreciating is things with good fundamentals, good companies, whereas prior to the trade war, there was arguably a lot of inflated names that really had no business being inflated. And that's where...
Yeah. The market is kind of already down in the dumps to a degree. It's recovered somewhat, but like the EU is one of our largest trading partners. We have a trade deficit with them because we're just too good at selling them stuff, I guess.
They just love buying from us.
Well, sorry, too good at buying from them, I guess. They're too good of customers.
Yeah.
So naturally that means we need to tax ourselves to try and prevent them buying too much of our stuff. It's just, nuts. And, the market has kind of recovered from this in part because I think the traders almost don't believe the tariffs will actually go into effect, or if they do, they'll be short-lived.
Yeah, but it's also a stock picker's market because you're seeing outside, people are being careful to buy what they perceive as a good investment versus just buying the market.
Right.
Which is good for us, value contrarian investors.
From our perspective, it's not a bad thing. I mean, we invest in those companies that don't have a lot of debt to begin with, and they're undervalued for whatever reason, or like we've talked about it, but like Moderna, they've got massive cash position. They've been really down in the dumps because of they decided that they weren't going to recommend the vaccines for at-risk groups of adults anymore because they were going to require more testing. Good old RFK Jr. behind the helm of the of the nation's health. But
and the thing is, for Moderna to be trading below literal liquidation value is crazy, and people just have this assumption that all they are is a COVID vaccine company, and
it's not true anymore.
While they actually still rake in a lot of cash from that, that's not what they are anymore. They reinvested into other pipelines, and I think 2 are up for FDA review this month alone, and the indication is very favorable for the company.
Yeah. Now, I will caveat this by saying, this recording will stick around for a while. We may not be even in this position anymore by the time whoever's listening to this hears it.
Yeah.
Or it's possible that we were even, it's possible that we turned out to be wrong or something. I still feel very strongly about this.
Yeah. And now, and to echo what I mentioned in the beginning, Josh Brown's comments on CNBC is that narratives change.
Narratives do change.
They'll change by the time this episode airs.
Yeah, and it's again, I like seeing that the market is counting a company down and out for dumb reasons.
Yeah.
It means that it's just sitting at a better deal.
Speaking of non-dumb reasons for a company to be down and out, Boeing, even if they get record orders, they just can't fulfill anything. But I wanted to mention Boeing because they settled for $1.1 billion with the Department of Justice, the surrounding the 737 MAX crashes. So that's positive for Boeing.
Yeah, I would say so.
And I also... I didn't know this. I'm sure you already knew this, but they're
I know everything, Quinn. Don't you know?
That's true. That's true. And so do I. How can that be true? But their facility is the largest building in the world. So much so that you can actually get cloud formation inside the building that has like 114-foot ceilings or something.
Sounds about right.
Yeah. Yeah, just insane.
It's actually not an uncommon thing to happen in warehouses, by the way. Like their Amazon warehouses will sometimes have like clouds forming and fog on the inside, which is just goes to show the size of things we build these days.
Just insane. And it's those finished built products. I mean, America does finished products really well.
Yeah, well, I wouldn't necessarily use Boeing as an example of that.
Yeah, that's true.
But to their credit, you only hear about plane crashes these days because they're so rare.
Yeah.
If something tragic happens, but it's just a constant background hum, you eventually tune it out. Once you start getting to the level where you only get 1 or 2 events a year or every few years, that's when it hits the news headlines because it's unusual.
Right.
Like people always forget how many people die in just car crashes, and it's in part because, like everybody drives, nobody feels like it's going to be them that dies, but
it's dangerous to drive cars, but we do it. It's a necessity.
Yeah, speaking of cars, did you hear that BYD, the Chinese electric car manufacturer, just eclipsed Tesla for sales volume in Europe?
Really?
Yeah, things are not looking up for Tesla right now. They've got the new models, but they're suffering from international competition. And the fact of the matter is, as far as I can tell, BYD is just producing a better car at a lower price point than Tesla.
Here's what I will say. I think Tesla is resting on its laurels as far as car production.
Oh, 100%.
Right? I mean, they're focusing on... They are focusing on the whole autonomous driving thing, which could be a game changer for them. But what I will say about Chinese versus American manufacturing is American manufacturing and innovation, tech innovation, is very good at breakthrough innovation.
Yes.
And there's a lot of bright minds in the Chinese market but I think what they tend to output is they're really good at taking something and refining it to an amazing efficiency, but just not as good as those breakthrough. It's like DeepSeek, with AI, they were able to really refine something that actually eclipsed ChatGPT briefly. But really what they did was refine an existing, known model.
There's something to be said for being second. Yep. First movers in an industry aren't always the ones that wind up owning the market. Because you can invent something, but it takes another kind of expertise to actually refine it into a commercial product. Sometimes, like, for example, Thomas Edison gets this flack because he didn't really invent the light bulb. He was really the head of an R&D group that invented thousands of light bulbs. He just was the driving force that created the system that produced, finally, the light bulb that could be commercially produced and sold.
Yeah.
Which is why he gets the credit, even though other people definitely contributed to the designs. It was kind of marketing that he was, this lone genius when he really wasn't. But, it's this thing where you worry the U.S. is behind in some ways. But again, like you said, we're very good at the finished products, which is where all the value is.
Right.
And it's why you see manufacturing jobs in the U.S. not get filled, because there are a lot of other jobs the U.S. offers that are much better and better paying than manufacturing jobs.
Nobody wants to assemble umbrellas.
No, nobody wants to pour molten steel at a steel factory. Are you kidding me? That sounds miserable.
I mean, I don't know. I feel like the steel workers, it actually is kind of an interesting job. I think that's different than like rote manufacturing.
Yeah, I mean, you get a certain sense of pride, I suppose. But and my problem again is that it's a relatively low paying job.
Well, in the U.S., it's pretty high paying.
There's still better high-paying jobs where you don't have to do physical manual labor.
I know the Cascade Steel manufacturing plant. They have really high wages. Like,
what's the wage?
I want to say last time I looked, the entry level was like $36 an hour.
Yeah, it's good, and it doesn't. But how much higher does it go? I mean,
it goes substantially higher. I mean, some of those guys are making like $60 an hour, and I think that's purely because of the union. I don't know if maybe we're not competitive in the market.
Average hourly wage in Oregon is $32 an hour.
Yeah. So that's
not a bad wage, but you're still having to do manual labor in exchange for that.
Sure, but it doesn't require any kind of advanced certificate or anything.
It's true.
It's a good job.
You got me there. It's a good job that people without an education can access. That's really the benefit of it. But what I'm saying is that the U.S. workforce is educated enough and well-trained enough that we don't really need a lot of low-skill jobs.
I agree. I think that it's a little bit different than, like, manufacturing, like fast fashion or umbrellas or whatever.
Yeah, I suppose. Although, China in particular is an innovator in its own right. With a lot of these, again, it's not really like necessarily breakthroughs, but they've gotten very good at very quality manufacturing. I mean, I hate to use this example, but you buy a fake watch from China, and sometimes it works better than the original, the real deal. I mean, I've seen these things sold in dark. Well, I won't say sold in dark alleys, but they're
the guy with a big trench coat.
You don't see that. I've met guys that
actually there was a guy that approached me in New York City that was literally like had a bunch of watches and a coat.
It's fantastic that places like that still exist, but I met a guy that had a fake watch and he was bragging about it because you look at it and you can't tell the difference. Yeah. I mean, you can tell the difference in the way it ticks, but he said it kept time better than the real thing that he actually also had. Like just the dude that collected fake watches. That's a guy. That's a guy that exists. You gotta. God forbid a man have hobbies. I suppose
that's true.
But
that's true.
You actually haggled and got a coat in the garment district of New York City. I don't think we talked about this on the podcast.
No. Well, I mean, it's not too relevant because while I do affect the GDP. I'm a little bit humble in that effect.
You've got a trade deficit with the garment shop that you bought from, right?
It's true. They didn't buy anything from me.
Yeah, exactly. You should tax yourself so that they don't sell you coats anymore.
That's a good idea. I will. I'll do that, and they'll pay. Speaking of garments, one of the things I did want to bring up, are you familiar with the Hoka brand?
Hoka brand.
Of
Is this
shoes?
a Hoka brand?
No. Hoka of shoes.
Sounds like a hokum to me.
Well, anyways, I just thought it was interesting that it's relatively new. A lot of people will be familiar. There's really comfy shoes. The brand has actually almost hit the same level of sales as Uggs, wildly popular shoe. They hit 2.2 billion in sales, while Uggs are at 2.5.
I'm sorry, I thought Uggs went out of fashion. Are people still wearing those?
You've been under a rock. People,
I may be under a rock when it comes to fashion. Look at what I'm wearing. I'm wearing a red button-down shirt from the 90s, I think, of the early aughts.
That's Nordstrom.
I look like a Lehman trader before they went under, is what I look like right now. You know
No,
that?
you need some suspenders for that.
Yeah, probably something like that.
But I mentioned this because both brands are owned by Deckers. But it's interesting to see that fashion trend. But Deckers has been in the news because they're very exposed to Chinese production. I mean, all their stuff is made in China. Just interesting to see the change in trends.
Yeah. I mean, what do they look like? What do these Hokos look like?
Hokas. They're like trainer shoes, running shoes, comfy shoes, that kind of thing.
Okay.
Yeah.
I'd probably wear them. You see, I'm spending too much time looking at the Japanese bond market to pay attention to shoes, I think.
Yeah.
My problem is if I shop new shoes, they would all look the same. So I have to go what I prefer to do is I prefer to find like lightly used shoes that are like uncommon, like real leather shoes that will stick around for a while.
Sure.
But, speaking
not quite
of
as
that,
comfy as a Hoka, though.
not as comfy as a Hoka. Yeah, speaking of that, I have been watching the Japanese bond market actually to switch subjects, and it's been
in Japanese.
Oh yeah, of course. I'm not going to fake that I know Japanese because that would not play well. But watch. I can at least watch the numbers and the yields.
I'll interrupt you once though. I just want to point out that we have the camera actually mounted on some bonds from Port of Morrow in Oregon.
Port of Morrow, yeah.
Yeah. So,
we got them all over the place. But I looking at the Japanese bond rates, they are at all-time highs right now. Which for Japan, because they were sitting at 0%, -% for the longest time, means they're the 40-year bonds are at 3.6%. Did you know that in Japan, when a stock goes up in value, it's red, and when it goes down, it's green? That is the most confusing thing to me.
That's annoying, quite frankly.
It's annoying, but in Eastern cultures, red is considered good and green is considered like the bad thing. So, you look sometimes at like Asian headlines, and they'll have like the inversion of what you would normally expect for a visual for a bad or good day.
Interesting.
But what's somewhat interesting about this is that Japan is at like a 260% debt to GDP ratio. And this is in part as like a leftover from like the 90s and the aughts from when the Bank of Japan was just buying up bonds like mad to support things. And it's, you could see there's kind of been a rush to safety out of U.S. markets. But what is kind of disconcerting about the Japanese bond appreciating value in particular is that it could potentially cause Japanese banks to trigger sell programs for their U.S. held T-bonds. And that affects the U.S. market in that it could potentially cause dramatic selling, like a sudden sell-off in the U.S. bond market to a degree. There's already been somewhat of a sell-off in the U.S. bond market.
And I think Japan is like the highest concentrated holder of U.S. bonds too, if I'm not mistaken.
Or last I looked, they have 1.3 trillion of T-bond stockpile. And for those that are unaware, when you sell a stock in the market, you're basically selling, hey, I've got these shares, who will buy them from me? And the buyers go, oh, you got all these shares, I will only accept a few cents lower now. You drive the price down when you sell. I mean, this works with any market, but with bonds, sometimes when they get reported, it's kind of the inverse, where there's a sell-off in the bond market and the current bond prices go down, and it's like a seesaw because they still often pay the same coupon rate. So as bonds sell off, the yield being offered naturally goes up. So it's, this is the bond price. This is the actual interest rate they pay. It's a seesaw. So as this is how I was taught as a broker, by the way, as the price goes down, interest rate goes up in response. So what that means is that if the Japanese decide to sell off USD bonds, we've already seen rates go up despite no raise in the rates from the central bank, which means that there's just been selling.
Yeah.
So that could cause rates to get higher, go even higher. What I would really hate to see at the end of this is stagflation. And people in the U.S., by and large, unless you were alive in the 70s, do not remember the misery of stagflation. And it's just a concatenation of two words, stagnation and inflation. You combine those two together, you get stagflation.
Has nothing to do with stags.
It has nothing to do with stags. But what that means is that the economy isn't growing, but prices are going up. So wages are not going up, but the price you pay at the pump, the grocery store, everywhere goes up. And that could be what could be triggered if bond yields and inflation starts creeping up, but you have this simultaneous drop in the economy from trade barriers being raised. So economy slows, prices go up, because, no matter what the administration says, tariffs are inflationary in nature. That's just how they work. They're a sales tax.
Yeah. Regardless of the efficacy, it's just that is a result.
Right. So it's not great. It's not ideal. So we kind of got lucky in that the U.S. economy was strong enough going into this that we're not getting any precipitous sudden drop in everything. It still remains to be seen whether that'll happen, because, a lot of these effects you won't really see fully priced in until the summer. The market is essentially banking on the fact right now that the administration is afraid of accidentally triggering a proper slowdown. So they're not actually going to impose dramatic tariffs. Which right now the administration can kind of be thought of as flirting with what is the edge that we can go to, without triggering a depression.
So still remains to be seen. I don't quite know why they loaded up on this EU thing. I guess they're trying to get them to the table in the same way that China came to the table. And the idea is that...
Or the UK.
Or the UK. Because the EU is one of our largest trading partners. I guess maybe we'll see a 90-day pause while they negotiate coming up soon. That might be an expectation.
I would expect that's the case, and that's effectively what the government is pricing, what the traders are pricing in for the government to do here. The other thing to consider is that a Trump administration is not forever. This is the last term he can stay in office legally,
allegedly.
Allegedly. So some people are looking through the administration, starting to in certain parts of the market where they're saying, okay, what happens when the tariffs come off? What do I want to own when that happens, if that happens? I would say there is historical precedent for the tariffs not coming off. When the Trump administration put the tariffs on, the Biden administration kept the China tariffs on throughout that administration.
I'm kind of surprised they didn't do anything about it, because it seems like they would have wanted to market something about that. But I guess if they quietly just kept them on because they could.
Well, here's the other thing. The government likes money. And if you stop charging tariffs, you have to come up with a deficit somewhere else.
Well, here's the saving grace, Drew. I'm actually waiting for World War I to end so that they can lift the temporary income tax.
Yeah, I forgot about that. Income taxes were temporary.
Oh, yeah. Well, they still are, because World War I is still happening, apparently.
It's a funny thing, those permanent temporary taxes. What I will say is that, going from tariffs to income tax, which is effectively what they did in World War I, is a far more efficient direction than going from income tax to tariffs, which is what they're attempting right now. And I don't think it's going to work out for them.
Yeah.
But, there are positive developments happening with this administration regarding other regulations as well. I don't want to just focus on the negatives about what's going on. That's what's tempting to talk about, is just the negatives. That gets the engagement and everything. But
here's the thing. I mean, a market that's down, all that is a market with a discount.
Right. And it creates opportunities when people are depressed. It creates opportunities when they're optimistic, too. You just got to be able to do the right kind of trade. The hedge fund managers can come up with some pretty wacky maneuvers to try and get that little tiny edge with a little bit of with not a lot of risk. But the other thing that the administration just announced, actually, as of recording today, so this is the 23rd.
Yeah, the market close.
After market close, is they announced that they by executive order, nuclear power permitting is going to be loosened. And what they did is they added an 18-month shot clock to nuclear power plant approvals and licensing. It's not uncommon for nuclear power plant licensing to take like a decade. It's absolutely intense what a nuclear power plant has to go through to get approvals, and rightly so to a large degree. So what they're trying to do with this is they're trying to say, hey, these permitting regulations are like too strict. It's, we're not getting our bang for our buck with this. So you need to make a decision within 18 months, either approve or deny, but don't leave it hanging for a decade.
Yeah. And,
the pro-development person inside of me says that this is a great thing. It's government permits do take too long in a lot of instances. That said, a lot of people are afraid that loosening the nuclear licensing regulations like this without being specific and targeted in the process that was tripping them up could cause some suboptimal corner cutting. But I don't know if you've looked at like small nuclear reactors like SMR. That's actually an Oregon-based company.
I mean, we've been invested in SMR.
Yeah, we've been invested in them.
Yeah, I kind of wish we were invested in it right now, but such is life.
Innovations like that do require a little bit of permit loosening because small modular nuclear reactors do not come with the same risks as giant monolithic, cooling tower plants.
Which
that most people think of.
The risks are so overblown. I mean, just don't put a nuclear reactor on Miami Beach in a hurricane zone. I mean, it's really not that difficult to do nuclear power safely.
Well, you argue that, but then we live in an earthquake zone.
Yeah.
So how are we going to...
Just don't put it... I mean, put a nuclear reactor in a safe area.
Right. The risks from nuclear are overblown, but my other hot take here is that other renewables have gotten so cheap by now that nuclear, by comparison, even though it's carbon free and it can generate a lot of baseload power, it's very, very, very expensive. Now, granted, a lot of that comes from just the safety permitting, but how many gains are you really going to get?
Is it because we've had a lack of nuclear power reactors, and because of that, we've had a lack of innovation? You see SMR, small scale modular nuclear, come about that really hasn't. It's in its infancy. Mm-hmm. We haven't really been able to implement it and improve upon it. Think about the efficiency gain we could get in an industry that is so efficient.
Right. And actually, you bring up a good point because, people have been talking small nuclear for years. And that's actually one area where China has thorium nuclear power plants now, which everybody thought was a pipe dream forever.
Remind us what thorium is?
I'm not going to get into it. It's sometimes it's considered a miracle fuel. Thorium is considered very, it's a different kind of fuel. It's a lower risk kind of nuclear fuel. That's all you need to know about thorium. I'm not going to get into it because I'll say it wrong. But the point is that small modular nuclear reactors have taken a long time to go through the process because they've been partially subject to the same rules as the giant, grid scale nuclear power plants. What small nuclear reactors, modular reactors do is they're more geared towards individual facilities or smaller towns. There's something that can be picked up and put down and doesn't require necessarily a lot of surrounding safety equipment. Also, their design is updated from older power plants, meaning they produce less waste, and it's almost impossible for them to melt down. It actually is impossible for them to melt down. I believe the version that I was looking at with SMR was cooled by liquid molten salt reactors. So those, if you lose power, they just they freeze. They've got failure states where they don't run away with themselves if the cooling and the power cuts off. So don't quote me on that, but they're safer.
I will be quoting you on it.
They're safer is the bottom line of it.
When they melt down, you'll be the first person that the news will blame.
Yeah, I hope you do. But my overarching problem with this is that small modular nuclear reactors have a clear use case in the market, wherein they're essentially replacing on-site fossil fuel production of things like heat and power for factories. And they're oftentimes replacing like natural gas generators in certain processes, or they're being used to power arc welding facilities at metal refining plants. So my problem with large-scale grid nuclear is that, again, you're right, safety regulations play into this, but by and large, it is simply cheaper these days to install large-scale solar and wind facilities in combination with battery, and you have a more scalable product that doesn't have to jump through all these hoops.
Yeah, but it's always good to have a variety of power sources, right?
You'd be surprised how much of the California grid is just powered by battery these days.
Well, battery from a variety of renewables, right?
Mostly solar, but yes.
Yeah.
Wind is a little bit more consistent, so usually the batteries are paired with solar plants so they can capture the excess during the day when energy is cheap and sell it when energy is less plentiful at night.
Yeah, but what happens when they turn off the sun?
Then the batteries come online. The batteries charge during the day and discharge at night. Right now, you can actually see the graph. You can look up the graph of solar power production and consumption in California right now. It's kind of a saddle. Energy use peaks later in the evening when solar drops off, which is a big part of the problem with solar. And the batteries actually drop off around like midnight, 1 a.m. That's when they all run out of juice and they have to start charging again the next day. But if that trend continues, solar coupled with battery tech will eventually just totally eclipse all other sources of power. And it'll be cheaper, too.
Yeah. So I think it's about time. Brings us to this day in economic history. And again, it's May 23rd after the close. So we're talking May 23rd. And Drew has not heard this before. I'm back to paper.
Good old paper.
Yeah, I've got a few things and then one thing I wanted to dive into, okay? So May 23rd, 1933. J.P. Morgan testifies before the Senate Banking Committee. And he admitted that neither he nor his business partners paid any income tax in 1931 or 1932, right in the depths of the Great Depression. And it was legal thanks to loss deductions and muni bond exemptions.
I mean, this was the Depression.
Yep. But it sparked major public backlash and paved the way for tougher tax enforcement and financial regulation. So I thought that was kind of an interesting tidbit.
Well, I mean, yeah, a lot of the SEC regulations were passed immediately following that.
Right.
It's always the Securities and Exchange Act of 1934 that's cited in all of our partnership documents.
And May 23rd, 1950, the United Auto Workers and General Motors signed the Treaty of Detroit. It's a 5-year labor contract that gave workers annual cost of living raises, health benefits, and pensions. In exchange, the union agreed to industrial peace, and it became a model for post-war labor management relations in the U.S., particularly for manufacturing. So it set the standard.
Industrial peace, what does that mean?
Oh, well, I mean, end of the strikes.
Okay.
Yeah. End of labor negotiations.
Okay. Great.
But it was landmark. That's why they call it the Treaty of Detroit.
Treaty of Detroit.
And now this one is not a financial event per se, but is symbolically important. May 23rd, 1934, exactly 1 year after J.P. Morgan testified for the Senate Banking Committee, Bonnie and Clyde are killed in a police ambush. The pair had become, for those who don't know, infamous during the Depression for robbing banks at a time when many Americans viewed banks as villains. And so their death marked an end of a violent era of public distrust in financial institutions and the rise of federal efforts to restore confidence, like deposit insurance and banking reform.
People love to blame banks for all their problems. And, to be fair, sometimes it's their fault. But what's really at fault usually is just crowd psychology. I mean, why did you have runs on the banks? It wasn't the banks. The banks didn't fail because they did something wrong with the deposits. They failed because the whole business model is fractional reserve banking, and if too many people ask for the deposit back, the bank fails. That's just how that works.
That actually reminds me of something we didn't talk about, is that a bunch of the big banks came together So USDT, Tether coin, cryptocurrency?
Yeah, stable coins.
Yeah, stable coins. Well, apparently several of the big banks, I couldn't name which ones, came together, announced that they are working on their own US dollar-backed cryptocurrency.
Yeah.
Now, what's interesting about that is banks are under regulations for anti-money laundering and whatnot, so it probably won't be like a USDT coin that you can hold personally because of their internal regulations. But that could lead to, instant transactions among banks on the back end potentially, which could be interesting.
There's also a danger with that because the reason you don't have instant transactions today is not because of a technical limitation necessarily. It's in part to prevent things like check fraud.
Yeah.
Like you need a period of time where you can verify transactions are real. Otherwise, sometimes you can wind up with, mistakes flashing through the banking system at lightning speed.
I mean, you could just allow a clawback period.
You could, but then what happens if the money on the other end is also gone instantaneously? It slows down the velocity of money, but part of that is by design.
Yeah.
I do have a problem. Like, it's the same reason we don't have same day settlement for trades.
I feel like you could get around that. I mean, you could allow it.
You could. There's ways to do it with a web of like liability insurance, for example.
A new insurance product.
I love insurance products, man. They make the world go round.
They should bring back credit default swaps.
I mean, they kind of do. That actually reminds me. I was talking about earlier how hedge funds come up with all sorts of weird transactions to try and get that last dime for as little risk as possible.
Yeah. One
thing that actually used to happen and was a little bit, well, actually still is common, but was particularly more common before all this madness with the tariffs happened. Many larger hedge funds would do something called a basis trade. And effectively what they did is that they arbitraged the difference between treasury bonds and treasury bond futures. There would be a spread between these two. So there would be a swap spread, is what that's called, between the future rate for tomorrow and what the bond is actually yielding today. And then because treasury bonds are considered the lowest risk asset you can hold in the market, you can also leverage them to the hilt. And what that means is that they would basically buy these treasury bonds and they would cover them. They would cover them with the difference of they would immediately go out and like sell them and leverage them and buy more treasuries with them. And so long as the borrowing and margin requirements for securities trading were lower than the spread between T-bonds and futures, you made a little bit of money on this transaction for relatively little risk. Now, there's a big but coming to this particular description of the trade because there's always a caveat. They find these loopholes and they're like, great, free money forever. And then it turns out, oh no, there was something we didn't account for. And what they didn't account for here is that if treasury yields suddenly spike, like say in the case of a trade dispute and people selling off their treasuries all of a sudden, the trade can go upside down because the funds are effectively margin leveraged all the way to the edge and are short treasuries. So I saw a quote from one hedge fund manager. He's described it as picking up nickels in front of a steamroller. Like it's
at what cost?
Fine most of the time, but if your finger gets caught while you're picking up a nickel, you're gonna die.
Yeah, it's just
or at least lose a few fingers.
It works until it doesn't.
Yeah, it works until it doesn't. That's very, very common.
And that's how I describe high-frequency traders.
Yeah, it works until it doesn't. Yeah.
I did have one last item that I wanted to go into a little bit in depth for this day in economic history.
Okay, there's more.
Oh, but wait, there's more. Rest his soul, Johnny. Who's the guy that did the advertisement? But wait, there's more. What's
I
his
don't
name?
know.
Yeah, you guys know him. He did all the ads, and he died.
Describes many people.
Yeah, the one guy, Billy Mays. That's his name. Rest his soul. But rest another soul. May 23rd, 1937. You know who died at the age of 97?
J.P. Morgan.
I mean, that's pretty close. John D. Rockefeller.
John D. Rockefeller.
And
the original Rock himself.
Exactly. For those who don't know, and we've talked about him on this podcast before, funny enough, but founder of Standard Oil, one of the richest individuals in history, and pioneer of both corporate consolidation and modern philanthropy. His death marks the end of an era of that old guard industrial capitalism. His estimated net worth, and was in 1913. This is right after they broke up Standard Oil, was $900 million, which would be the equivalent of over $29 billion today, adjusted for inflation. But also, as a share of U.S. GDP, some estimates place his wealth at the equivalent of over $400 billion in current terms.
Yeah, that makes a bit more sense.
But that's adjusted, we have a more diversified economy, right?
Well, this is why inflation adjustments lose their meaning over long periods of time.
Sure. So somewhere between $29 billion and $400 billion is the
You could be the equivalent of a 500 billionaire in the 1500s, but you'd still probably die of the plague.
Right. Only gets you so far.
Yeah.
But so I wanted to go over a couple interesting things about Johnny Rockefeller in memoriam, May 23rd. So he founded Standard Oil in 1870. And he focused not on oil drilling, but on refining and distribution, right? And so this decision was strategic. It offered steadier margins, less volatility compared to exploration, picks and shovels, if you will.
Great to be a middleman.
Yep. And at its peak, Standard Oil controlled about 90% of oil refining and transport in the United States. The company was vertically integrated. They owned the pipelines, the rail cars, the storage facilities, and the distribution networks.
Yep.
And in 1882, Standard Oil pioneered the trust structure, allowing Rockefeller to centralize control over a network of subsidiaries without outright mergers, which was a workaround for restrictive state incorporation laws at the time. And, of course, and we talked about this before, in 1911, the Supreme Court ruled that Standard Oil violated the Sherman Antitrust Act in order that it be broken up into 34 different companies. And those included what would later become Exxon, Mobil, Chevron, ConocoPhillips. Rockefeller owned shares in all of them. So following the breakup, the combined value of these companies increased, and so did the value of his holdings. He was richer than he had ever been after they broke up the monopoly.
Why can't we just do this today?
It's not
Everybody would be so much richer.
Capital gets complacent in these monopolies. It's a good thing for everyone involved, for competition.
Most of the time.
Well, yeah, most of the time. Not all the time.
Yeah.
Never say never, I guess.
As it goes with economics, most of the time is usually the mantra.
And a few other interesting tidbits. So Rockefeller began earning money at a young age. At 12, he had saved $50, 50 big ones from doing chores, selling turkeys. He loaned the money to a local farmer at 7% interest. And
from the outset.
And he recorded the transaction in a ledger.
Wasn't his father a con man?
I'm getting to that. You've already been informed. But that ledger marked the start of a lifelong habit, meticulously recording every income and expense that he ever had. He kept detailed books as a teenager, continued doing so into adulthood, and that discipline mirrored the operational efficiency that he demanded from Standard Oil. He also...
You know what? If I can interrupt you, what this reminds me of is that you'd be surprised how far you can get just by having basic ledgers and accounting at a small business. It is absolutely insane how many businesses get by with essentially just vibes-based accounting. I remember there was an actual study of businesses in, I believe it was India. It was either India or Pakistan, where all the researchers did in the study is they encouraged the businesses to do basic ledgers for their accounting for inventory, and the efficiency gains they saw at these companies were wild, and they stuck around for long after the research study ended. They checked back in with them like a year later, and they were still much more efficient than they had been pre-ledger system.
Even just keeping track of when you go to zero in worst case scenario can be helpful for efficiency.
Yeah.
And so Rockefeller also deliberately avoided speculative activities like oil drilling. He focused on refining, storage, logistics, the supply chain where he could exert the greatest amount of control and reduce his volatility. Another tidbit, so Rockefeller celebrated September 26th as Job Day, the anniversary of his first job as a bookkeeper in 1855. He considered it more important than his birthday. He reportedly encouraged others to remember the value of employment and hard work, reflecting his strong belief in structured labor and productivity.
Wow.
Yeah.
What a guy.
And in his later years, Rockefeller became known for giving away dimes to children and adults alike. That it began in the early 1900s, continued until he died.
Isn't that the origin of March of the Dimes?
I think so. And it wasn't a random act. He intended it to be a symbol of thrift and financial prudence. Thousands of people reportedly received dimes from him in person, which is kind of an interesting way to go about things.
Good branding for the day, I suppose.
Yeah.
You know, the one thing I will say, compound interest is the most powerful force in the universe, of course. But
oh, yeah.
The funny thing I find about this is that our economy basically runs on debt. So, you know, it's good to be the person that is thrifty when everybody is borrowing money. But by and large, our economy would kind of collapse if nobody took out loans.
Right. You know, speaking of compound interest, I love that episode of Futurama where one of the first ones where he goes to the future. For those who don't know, he's in a cryostasis thing in 1999, and he wakes up in the year 3000, and he tries to buy something. He uses his Visa, and the guy's like, Visa's been out of business for 300 years, tries MasterCard for 600 years, American Express, 800 years. Then he tries Discover, and he says, oh, we don't take Discover.
Yeah.
But then he needs to get some money, and his bank, Big Apple Bank, is still around, and he had like 13 cents in there in 1999, compounded interest. It was like billions of dollars.
What was wild, I've thought about this multiple times. I think they got the math right when they did that in the show, because the show writers were notorious for being very, very accurate with anything to do with mathematical calculations. It was like The Simpsons, where they had a writer on staff that was literally a mathematician. But the one thing that gets me is, and why I think this wouldn't work, is that over time, I'm not convinced a bank account would outpace just regular inflation. And you're assuming over those 1,000 years there aren't any currency changes. So, like, it might be $13 billion in, like, today's money, but, like, after the various reverse splits and currency changes, it could be totally worthless.
It's true. Also, I mean, realistically, they would have closed the bank account because he was a missing person.
Right. I mean, yeah, but it's putting aside your disbelief, you know. But what it really implies, you know, and what gets me with Futurama is that it's not implying that that's stuck in the bank account, because like he said, like, they would have been closed because it was a missing person, or it would have been devalued, or, you know, it implies one of two things. Like, it implies, A, they just never close a bank account. There's some reasonability to that, where, you know, they just never marked him as missing or whatever. The other implication, though, is that the bank may have intentionally kept it open after a long enough time period and didn't report it as missing property because they were using it for, like, fraud. Like, you know, it got used for fraud at some point, and, you know, there was actual money going in and out of the account. Maybe the bank was, like, being like, oh, look, no, we actually have this amount of deposits, or they were like, we'll just use this to pad our required minimum reserve.
All 13 cents of it. Well, I guess they could have been like Wells Fargo and been doing it systematically, and so, you know, 13 cents from a million people is a lot of money.
Effectively, what that implies from Fry having his bank account open 1,000 years later is, and the bank being in business, is that the bank was doing something nefarious. And the other thing that it implies is, you know, it could imply that there was actually deflation over the time period. What the other thing, because Fry spends the money in the episode, which is what really gets me, is that this should be worthless, even considering the compounded interest. And so what could have happened is that you had a period of inflation, and then because Fry is not accessing this bank account, and you've got a period of economic ruin, and there's a deflationary event where, you know, suddenly $1 yesterday is worth $2 today. So nobody is spending any money. They're all saving it. They're all trying not to spend. Well, Fry in this case is the ultimate saver because he literally cannot spend it. So it implies some very unpleasant things have happened in the interim, which, I mean, to be fair, like a lot of unpleasant things happened between today, 2025, and 1025 in the Middle Ages. That was before the Black Death.
That's true. And also, I mean, don't they show clips of like aliens destroying Earth in that time period?
Yeah, maybe that was a deflationary event. There was an economic crisis. There were several economic crises.
That's true.
So in his account, stayed open through it all.
Impressive. Should bank with Big Apple Bank, or maybe not.
You'd have to be dead to win.
Yeah. But another couple of items here. I mean, obviously, Rockefeller, he had a philanthropic legacy. He donated more than $500 million in his lifetime, and his contributions established the University of Chicago, Rockefeller University, the Rockefeller Foundation. They focused on education, public health, and medical research. He helped fund the General Education Board, which shaped modern American school system. He tried to eradicate diseases like hookworm and yellow fever. And it was systematic. He had long-term planning, performance tracking in the philanthropy, and really built the stage for modern philanthropic foundation management. And to your point, he had a checkered history with his family. I mean, Rockefeller's father, William Avery Rockefeller, was basically a con artist and self-styled physician who sold fraudulent patent medicines. He lived under an alias and married a second woman without divorcing John's mother.
Yep.
And, so the unstable upbringing might have affected his need for control.
There is a disturbingly fine line between genius of business and con artist. They unfortunately require similar skill sets. It's just with one, you're okay with stealing.
Yeah. But, it probably, he wanted to be legitimate.
Right.
In what he did, but
right.
So it's an interesting contrast to his upbringing. So rip the man to Rockefeller. Everybody give up the Rockefeller salute, and I'm not going to do it on video, but it's flipping the bird. There's famous photos of him flipping the bird to the media.
Yeah. So middle finger.
With that, this has been the Capital Call. I hope you enjoyed it. We'll see you next week. Happy Memorial Day. I'm Quinn Millegan.
I'm Drew Millegan.
And till next time, stay liquid, my friends.
Stay liquid.